Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 23rd of March. Now, the coronavirus continuing to grip Europe and the fatalities and spread of the disease is continuing to escalate pretty much on a daily basis now. We're seeing lockdowns across Europe and also coming into place across the US as well. Now, that's having obviously major impacts on market sentiment and also the direction of these markets, which pretty much is continuing in the downward direction that we've seen for quite some time now. So let's take a look at a few markets here that we're keeping a close eye on in the trading room and what we're sort of expecting and some of the better plays that we're looking at going into the beginning of this week. So if we come across and take a look at the euro dollar here, first of all. Now, we spoke about euro dollar last week. We're looking for the 108 level to get taken out last week and looking for continued weakness. Now, last week we saw that 108 level get broken and the market sort of now made quite a move down towards the 105.50 price point. Now, if I just zoom out of this, you can see that these structure levels and why we've been talking about these structure levels. 108 has been a big key level going back many years. Also 105. The market at the moment, now we're taking out 108 decisively. We're halfway on to testing 105, and you can see that each time the market's taken one of these levels out, it's pretty much gone straight to the next one. So, you know, this has happened many times. Looks like we're just in a slight pause at the moment before looking for a retest there towards that 105 price point. If we come down the time frames and take a look at this on the 4-hour time frame, you can see what's happened. Last week we took 108 out. The market came back to retest 108 again, and now we seem to be finding a bit of support here around the 106.50 area. So this for me is the sort of trigger point for the next move and the next leg to the short side. At the moment, we're seeing weakness here coming back, possibly retesting 106.50. Below this, we've got that 105.50 target to the short side. So still looking for euro weakness against the US dollar. That falls in line with the dollar strength that we've been seeing across the board for quite some time now, and seeing those huge rallies in the rush to buy dollars at the moment. If we come and have a look at the Dow here, now the market opened up last night and went locked limit down pretty much almost instantly. Since then, the market sort of just drifted sideways. It's just been grinding. If I just sort of show you this on the lower time frames, you'll see that the market's just been sort of grinding higher here and starting to pick up a bit of momentum. So what can we expect from price action? Well, if we take a look at this if we take a look at this on the 4-hour time frame, first of all, we've got this big gap in the market. The market's now retracing here off that initial shock sell-off last night, and above there we've got that key 19,000 level. And this area here, the market sort of found previous support a number of times. Again, if we can get up to 19,000, this might be a good place to look for rejection and weakness to come into these markets. This has really been the play for these markets for quite some time, is to sell the rallies. And you can see this sort of happening so many times before. Every time the markets come up to a key level, when we had 21,100, 21,100 was a good time to sell the market. Every time it came back to retest it, and the market sort of declined. We also had the same sort of thing happening here at 20, and we've also got, as indeed we've had the opposite of a good idea to buy at 19,000 in the past. That's when it was support. Now it's going to become resistance. I'll certainly be looking for weakness in this market around 19. If we get that, that will be a good place to be selling. Now, if we look at that from the high side, now where could the market potentially move to? And we've been talking now some time about this 17,700 to 18,000 level as being a sort of a target point for the market, particularly for weakness underneath that 20,000 level. You can see where the market is now. Last week we got down to, well, about halfway through this trading window. Now, since Sunday night, the market gapped down. It also sort of like fell further, and now we've got that sort of retracement occurring there. But you can see it's hardly not very far away from these levels. So the sort of play I'm looking for here is some sort of retracement back into some sort of rejection area. 19,000 could be that area that we just looked at on the 4-hour time frame. Then looking for a decisive retest down here to 17,700 to 18,000. Now, if we come and take a look at gold, gold again, remind ourselves of the analysis that we discussed last week. This 14,775 area is a sort of key area here that we're keeping an eye on. This area here has been previous structure level on the market, also coincides with the previous low of the monthly trend here, monthly bullish trend. And for this trend to stay intact, if the market actually rebounded from here, this actually looks very nice from a technical perspective. The problem we've had is that markets are just getting liquidated regardless of what they are, and gold is one of those that is being liquidated. And as long as that's happening, this is not likely to sort of get any buying coming back in. Having said that, we're starting to see some stabilization here. And you can see this from the 4-hour time frame. Last week, the market was really sort of stabilizing around this sort of 1475 area. In fact, there's a lower time frame levels here on this market where the market's been finding some support. So what we're looking for here is to see if the market actually starts to break to the long side, and if we have really seen a bottom here in the gold market. This is a typical safe haven market, so we might expect to see some sort of inflows of funds at some point in time. The question is now that time? So you can see that we've got this sort of area here from around 1500 upwards. There's a bit of structure there on the daily time frame. Up from there, we've got around 1550 to 1560, and then back up to that key level at 1580. So again, if we come down to the lower time frames and take a look at this maybe on the 4-hour time frame, what I'm looking for here is to see if we can get a bit of buying coming back in, and if we can, then I'll be looking for a bit of a play to the long side. So the sort of move I'm looking for is if the market can get above this sort of 1580 area here, 1518 area, that's these highs. Now, if we can get above those highs, that's going to demonstrate that we've got decisive strength coming back into this market. We'll also see that we're clearing some of these resistance that you can see that we've got here around this level. And above this area, well, we've got a bit of a move up there towards that sort of 1555, 1550 to 1560 zone. And that coincides with these previous structure that you can see. So that's the play that I'm looking at and that's the sort of bullish confirmation I'm looking for, is for opportunities just above that sort of 1518 area. So that's the sort of some of the markets here that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.